that answers all your stock-specific questions. I'm Ankita Saxena, and with me is Kanishka Sarkar. In the next 1 hour, we'll be taking all the questions that you are sending us. But before that, before we start taking your questions, let's take stock of how the market is shaping up at this juncture. Kanishka, we are managing to hold above the 25,100 level. In fact, we have a sharp recovery that we saw coming in on Nifty. Almost 75 odd points recovery on Nifty. Nifty Bank also trading in the green. It's up almost 190 odd points. So it's a good day coming in today.
Absolutely, a very good day coming in, though we are off the day's high point, but still hovering near that level. At that 25,117 level is where we are at right now. When it comes to the Nifty, Sensex, that too is trading about 0.3% higher, up more than 260 points as we speak. It's at that 82,126 level. On the other hand, like you pointed out, Nifty Bank, that is at that 50,890 level, up more than 190 points. The NSE advanced decline ratio, that's also tilted largely in the favor of advances. Apart from that, let's also take a look at which are the contributors to the gains in the Nifty today. Now, Dr. Reddy's, we're not really seeing any sectoral trend when it comes to the Nifty. Lots of contributors are leading the pack is Dr. Reddy's with 1.5% of gains. Next up is Cipla, BEL, Bajaj Finserv, SBI Life. They're all the top contributors when it comes to the Nifty 50. Some of the losers that are limiting the upside on the Nifty.
Right, Kanishka, but before we get the entire market check, let's go across to Ashish Chauhan, NSE's chief, who's speaking at the FICCI event. Let's cut in and see what he has to say.
Response. In 1 second, there are 1,000 milliseconds, 10 lakh microseconds, and 10⁻⁹. There is 100 crore nanoseconds. So we have started now matching in nanoseconds range. And that puts us as the fastest stock exchange in the world by miles compared to any other exchange. And that is basically to show that India is still calling shots, not only in technology, but also in thinking about the markets. We regularly run full-scale live operations from disaster recovery systems to assure continuity. Our Cyber Defense Center uses real-time threat intelligence, analytics, and anomaly detection to mitigate risks, especially during geopolitical events. During Operation Sindoor, in one specific 20 minutes period, we got 40 crore attacks, and we could successfully ensure that NSE's group's websites continue to function for the users. We have simplified user access and compliance and are moving to nanosecond response, as I said, in select segments. We are also embracing generative AI to improve productivity, regulatory reviews, investor communications, and operational efficiency. Markets cannot thrive without trust. In 30 years of its operations, NSE has lived by its founding principles of enabling fair, efficient, and transparent trust markets. We celebrated our 79th Independence Day. I many times say that in 78 years of our independence, what did we achieve? We achieved trust of our investors, trust of our normal citizens in our entrepreneurs. And that is what the trust markets are all about. SEBI and NSE have served as torchbearers of governance, ensuring robust disclosure norms, risk-based supervision, real-time surveillance, and fair market practices to bring this trust into play. India's rights architecture, especially of majority of minority, no golden shares, stronger independence norms, tighter related party transaction oversight, and rising board diversity have created protections that are often larger than global practice. Corporate governance has moved from rule book to strategy, with valuation and cost of capital responding to quality of disclosure and board conduct. India's governance goal is simple: fewer surprises, faster truth. Together, innovation, technology, and transparency have created a virtuous cycle, making India's capital markets a key pillar of growth in powering India's rise. Honorable Governor of Maharashtra, Shri C.P. Radhakrishnan said last year at NSE that without capital, there is no Viksit Bharat. And these markets are going to provide the capital that is required for Viksit Bharat. For me, I have no doubt that India will become Viksit Bharat on the back of NSE. And all the members of NSE also deserve kudos for bringing markets to the smallest and the largest investors and to the remotest corner of India. A tree or a seed planted in 1992, that was NSE, has now become a kalparuksh, which will give what India requires in the future. As we look ahead, our mission remains clear: channelizing India's vast savings towards productive capital, facilitating fund mobilization, fueling entrepreneurship, wealth creation, capital formation, and job creation. In doing so, we are not just strengthening investment returns, but shaping India's destiny as a developed nation. And FICCI's role in this journey is also vital. I am sure under SEBI's guidance and together with all stakeholders, we will ensure that Indian capital markets, with innovation, technology, and transparency at the center, will continue to be a strong engine that powers India's inclusive growth to a Vikshit Bharat. Thank you. Jai Hind.
All right, that's the MD and CEO of NSE speaking, but we'll cut out of that and we'll start with our show. For our show, we're now joined by Sharmila Joshi and also Lakshmikant Chukna on the technical. He's the technical analyst, institutional research from Yes Securities India. Hi, good morning to both of you. Thank you so much for taking the time out and joining us. Before we get going with all the questions then, firstly, Sharmila, let me come to you and ask you, with this whole GST rate rationalization that's underway, is this going to be the next trigger, next positive trigger for the markets? We are also getting into the festive season. This seems to be a big festive bonanza coming in for the consumers. Are these going to cushion the markets from the tariff overhang that might be left?
I think that's $1 million question, whether it will cushion you from the tariff outfall or not. Because let's not forget that's a global event, and the way that will be viewed will be not so much to do with what is happening domestically. Because honestly, the kind of moves, GST being one of them, the kind of moves that we've seen over the last year or so, starting with the budget, then we've had interest rate cuts, which are sort of front-loaded in the system. So the whole theme seemed to be to get consumption back on track. And I think this is just like the next logical step in that whole the thought process that seems to be taking place. But unfortunately, we've had to deal with the uncertainties, global uncertainties, whether it's war, whether it is now this tariff situation, which seems to be dragging on. So that remains to be seen. But when all that is when the dust settles on that, what we need to really remember is that all these moves have been made to get consumption back on track, and which is why I keep saying that when you buy it today, your goal should be like a 2 or 3 year goal, and consumption should find stocks related to consumption should find a place in that portfolio.
All right, so which way consumption heads from here on is the next trigger that we'll be watching out for. But let's get started with all the queries then. Lakshmikant, let me come to you for this one. This is a query on Yes Bank. This is Radhakrishnan writing from Bangalore. He has 6,000 shares of Yes Bank at an average price of 25 rupees. He wants to know what's the future looking like for this stock. Any short-term target that you can give us?
Good morning to you all. And see, Yes Bank is the Yes Security Limited is the subsidiary of the Yes Bank, and I am the employee of the Yes Bank, so I cannot recommend anything due to SEBI regulation.
But Sharmila, let me come to you. From a fundamental standpoint, how are things looking for Yes Bank? Or is this one of the stocks on your list, or would you like to suggest any other picks from the banking pack?
So very honestly, at the moment, it's not on my list for the simple reason that I think the kind of correction that we've seen in the private banking space makes me warrant looking at some of the other stocks before this. So for instance, an IDFC First Bank would be my preference over a Yes Bank. Having said that, the valuations of Yes Bank look reasonable. So if you are invested, I think continue to hold it. But my view is obviously long term. I think that there are significant upsides even from the current price.
All right, so that's the call coming in on Yes Bank. But let's move on to the next question. This is coming in from SM Reddy, who's writing in from Hyderabad. He says that he has 200 shares of Hindustan Zinc that he's bought at a bank price of 435 rupees. He wants to know if it's a hold or a sell and what should be the target. So he's bought it at a buying price of 435. He's clearly sitting at a loss. Lakshmikant, what should be the target and what should he be doing with this counter? Do you see an up move coming in, or should he really book his losses at this juncture?
This is last 2 to 3 days, we have seen some sort of traction in the Nifty metal space. But if we talk specifically about the Hindustan Zinc, it is still facing many hurdles near its bearish crossover of 50 and 100 DMA, which is placed around the zone of 445 to 450 zone. So that would be the stiff hurdle. I think once it crosses this hurdle, then after it will even to resume its upside momentum. However, on the downside, the levels of 410 could provide support. So I am expecting range bound move till it trade within the band of 450 to 410. Once it crosses 450, then after we could see that this stock will out of the wood and we could see further upside move. Till then, 410 could provide the support. So I think he should hold with this stop loss of 410 and wait for the moment when this stock will give breakout of the levels of 450, from where it will continue its upside move toward the levels of 475 to 480.
All right, so those are the levels to track. A hold call coming on Hindustan Zinc, and 410 is the support level that Lakshmikant has suggested. But on that note, we'll take a very short break. Be right back with more of your queries to be answered on the other side.
Experts. Let's resume with all the questions now. This is Avnish, who's writing from Odisha. He says he has 5,000 shares of Eternal that he's bought at a buying price of 220 rupees. He wants to know if he should be holding on to it or should he be booking profit. Sharmila, let me come to you for Zomato or Eternal. It has hit its 324 mark. In fact, so he's sitting on good profits. Do you see more upside to it? He's not given his holding period, and I believe that is of the essence, because Zomato's fundamentals seem to be strong at this juncture, especially when the entire competitive intensity has waned or is waning perhaps. But what do you suggest to him? Do you suggest a partial profit booking, or should he book out entirely?
No, I think he needs to stay put. I do agree on a fundamental perspective, the valuations look a little stretched. But I think precisely for the reasons that you mentioned, they seem to be doing well. Their competition seems to be, they really seem to have taken the market share in a very large way. Without commenting on what the competition is doing, and they seem to be on a very strong wicket. I think these are two very strong reasons to continue to hold on to a stock, even though it looks expensive and it is near its all-time high. So at this moment, given that everything seems to be, all the strategies that they have put in place are working for them, I think you need to give it a couple of more quarters and see whether it really takes them, in terms of earnings and profitability to the next level. So I think for the moment, it would be a hold.
Hold call for Eternal. But the next question is coming from Manoj. He has a query about Karnataka Bank. He says he has 500 shares at a price of 200 rupees. He hasn't given us the holding period, but he says now that it's stuck and the stock has been coming down, he's sitting with losses. Sharmila, if you could tell us, should he continue to hold the stock or should he exit?
Again, coming back to, we had an earlier query about a bank, I think Yes Bank. It is just that, post this correction and where the fundamentals stand for Karnataka Bank, I think you might be better off investing or shifting to some other bank. Having said that, at this valuation, Karnataka Bank looks reasonable, and that way I don't see any concern in holding on if you are long-term in your view.
So a long-term, not a problem when it comes to Karnataka Bank. But Lakshmikant, coming to you, what are the levels that you're spotting for this one? How are the charts looking?
approaching 200 days, which is based around the zone of 160. I think once it reaches this level, then further correction is possible. So I think he should hold till it hold the levels of 160, and once it reaches this level, then I think he should exit from the stock and try to find some more good stock where he can get good amount of return.
All right, so that's the view for Karnataka Bank on the technicals. A hold for now is what Lakshmikant is suggesting. But let's move on to the next query that's coming in by Sambasiva Rao, who's writing in from Andhra Pradesh. He says he wants your advice on which one is a better purchase for long-term, 2 to 3 years perspective, DLF or macro-tech developers. Sharmila, let me come to you for this one. What would you be bullish on, DLF or macro-tech? We have seen considerable correction in the realty pack, but do you see, with the big push that's coming in for consumption, do you see a big fillip coming in for the real estate sector as well?
I do like real estate as a sector, and it has been among the sectors and the stocks have been, which have been recommending for the past couple of years. Yes, I think currently we are seeing that in some pockets there has been a slowdown in terms of the new sales registered, which is apparent in a lot of the numbers of real estate companies that we saw. Having said all that, I think that the two stocks that we are talking of here, DLF and Macrotech, they both have some very positive things going on for them. DLF, the way they have performed in the market that they are in, and I believe they are now have entered or are thinking of entering into Mumbai as well. And even where Macrotech is concerned, I think where in the sort of the niche that they operated, they tried to make a luxury sort of a product available to home buyers at a fairly reasonable price, and that has been their strong USP that has played out very well for them in the Mumbai region. So having said that, I think that, and if you consider the projects that both these companies have going on, I do like both of them. I think valuations for both are high, but if you are long term in your view, then I think you can enter either. I would not really honestly like to choose between the two. Maybe you can make a basket of those, and maybe you could add a couple of more stocks to that, like a Shobha or a Prestige, and have a real estate basket and keep investing in it whenever you see drawdowns in the market.
So that's the view on the realty pack. But moving on to the next question then, this is Chandan Kumar writing from Hyderabad. Lakshmikant, let me come to you. This query is on Tata Motors. The viewer wants to put in 2 lakhs of money in Tata Motors for the short term. What would you suggest should be the entry level, and should they really be picking up this stock, or would you suggest another pack, another stock in the auto pack?
See, previous week it has formed bullish engulfing candle after 2 days of correction, and it has found support near the levels of 625 to 640 zone. Then after it started making upside move, but now it is consolidating near its 200 SMA, which is placed around the zone of 710. I think that would be the crucial level to watch it out for Tata Motor. Any decisive move above the levels of 710 could trigger bullish upside move in Tata Motor, and after surpassing this level, we could see further acceleration in the buying momentum toward the levels of 750 to 760. So I think he should wait for this breakout of the levels of 710. Once it crosses this level, then definitely he can buy this stock.
All right, so that's the view on technicals as far as Tata Motors is concerned. But let's move on to the next question that's coming in from Anand from Bangalore. He says he holds Coal India, 500 shares at an average buying price of 280 rupees. He wants to know, should he book profits or continue to hold or buy more? What's the outlook? Sharmila, he's not given a time horizon though. But Coal India, what do you pencil in for Coal India? Now, there are short-term headwinds for this counter, but we've heard good commentary coming in as far as the long-term view is concerned. So what would be your take, Sharmila?
I think it should continue to hold, very honestly, from a longer term perspective, because these are a couple of the PSUs where the dividend yield is quite high, and just purely for retail investors from that perspective, these stocks remain a good buy. So I'm not really looking at valuations are reasonable, but I'm not looking at really any major upside or anything. But I just think that looking at the dividend yield the stock is giving for retail investors, this stock makes a lot of sense, since retailer tends to stay invested for a long period of time.
All right, so a good long-term buy that is a Coal India. That's the view coming from Sharmila. But on that note, we'll take a very short break. Be right back with more of your queries to be answered on the other side. has 120 shares of Swiggy at an average price of 390 rupees. He wants to know, should he buy more at the current levels? He's looking to hold the stock for a period of about 3 to 5 years. What would you suggest?
Clearly, Eternal seems to have sort of stolen the march on Swiggy. But having said that, I think given the size of our geography as well as the certain pockets that Swiggy has where it does have a very strong hold, and looking at how they will expand, etc. While if you were to buy fresh, maybe I would say to buy Eternal simply because it is delivering good numbers, and as we discussed earlier, it's on a strong note. But I think if you're Swiggy, you could continue to hold it. Between the two, as I said, I prefer Eternal. But having said that, Swiggy too is a decent stock to hold from a longer term perspective.
All right, so that's the view coming in on Swiggy, a whole call coming in on Swiggy as well. But let's move on to the next question. This is coming from Rajan from Bangalore. He says that he holds Chola Finance 650 stocks at a bank price of 746. He wants to know if he should be adding more or moving on to Geo Financial, or add more of Geo Financials, which he's holding at a buying price of 241. He wants a perspective, say, for the next 12 months. Lakshmikant, let me come to you for this question. Chola Finance, Geo Financials, which is a better bet for you?
See, looking at the chart of the Chola Finance, the stock has found some sort of a stability near its 200 SMA, which is placed around the levels of 1,430. Then it started moving on the higher side. But now for the last 4 days, it has been consolidating near its 100 SMA. So I think falling trend line breakout could be expected in this stock once it gives the breakthrough of the levels of 1,540. Then after further upside move could be possible in Chola Finance toward the levels of 1,585 to 1,600 levels. And if it crosses this, then further upward move could be possible toward the levels of 1,660. So risk reward ratio is looking favorable. And we once it gives breakthrough the levels of 1,540, then after upside move will be resume by Chola Finance. Now talking about Geo Finance, so from last few days, this stock has been facing some headwind from the levels of 340. So I think wait for the dip. If Geo Finance comes near the levels of 315 to 310, I think that would be the good level from where one can initiate to take long bet in this stock, and from where we could see reversal kind of move. Then after once it crosses the levels of 340, then after we will see a further upside move in Geo Finance toward the levels of 370 to 380 level. So I think both these stocks are looking good, and one can go continue to hold these to Geo Finance and Chola Finance.
Both the whole call coming for Geo Finance and Chola Finance. But moving on to the next query, then this is a long-term query. Sharmila, so let me come to you for this month. This is Suresh writing from Ludhiana. He's a long-term investor. He wants to know your view on IRCTC. He says he's been holding 250 shares of IRCTC at a price of 804. So he's clearly been sitting at a loss. He says that from the past few months, the stock has not shown any growth. So should he continue to hold for the long term, or should he sell out and look at some other stock that he could start investing in for the long term? What would your view be?
My advice would be to hold, especially since he's long term, simply because, I think that we spoke a while earlier about consumption. I think this travel is another consumption that I'm positive on. Simply because I think the trend that we've witnessed over the last couple of years, where a lot more Indians are traveling, whether it is domestically, whether it is overseas. And when you're talking of domestic travel, one big segment of people do use the trains for travel, and within that, IRCTC does have a monopoly on 2 or 3 segments: water, ticketing, etc. So, as they also had plans to introduce certain premium services, etc. And I think that given the valuations that it's at this point in time, and the overall outlook for travel and consumption going forward, I think this fits nicely into the theme, and you should continue to hold.
Continue to hold IRCTC. That's the word coming in. That's what Sharmila says. But moving on to the next question now. This is coming from R. Ganesh, who's writing in from Bangalore. He says that he wants to buy the following shares. He wants to hold it for the next 3 to 4 years. DLF and Garden Reach Shipbuilding. Lakshmikant, let me come to you for the entry levels. He says, is this the right time to get into these counters? DLF and Garden Reach, what are the levels to watch out for?
See, for the lower levels, I think that would be the good bet if anybody can buy from the current prices. Risk reward ratio is also looking favorable. So I think one can keep the stop loss of 745 on the downside and can see a side move toward the levels of 845 to 865. So that would be the upcoming target for the DLF. For last few days, it has been holding its bullish crossover of 100 and 200 DMA, so which is showing a creating positive sentiment for the DLF. Now, talking about Garden Reach, so this stock has also consolidating above its 100 days and 20-day SMA levels. So I think breakout of the levels of 2720. So that would be the good entry point once it surpasses the levels of 2720. Then after we could say upside move in Garden Reach toward the levels of 3000. So for GRC, you should wait for the breakout of the levels of 2720.
So those are the levels to watch as far as GRSC is concerned. But on that note, we'll take a very short break. Be right back with more of your queries to be answered on the other side. Profits at present, but will there be more upside is the thing that she's looking at. If you could suggest some short-term targets for these two stocks.
So, relative finance has been trending higher, and recently it has given a breakout on the upside. It has also surpassed its previous swing high of 214 with the formation of a long bullish candle on the daily chart. So, I'm expecting some more upside in L&T finance toward the levels of 228 to 230 zone. So that would be the expected target from our side. On the downside, this quality view will remain intact till it hold up the levels of 210. So that would be the strong support from where earlier it has also seen a breakthrough momentum on the upside. So we expect that further momentum in LTF toward the levels of 228 to 230. Now talking about Ashok Leyland, so Ashok Leyland has given a strong upside move 2 days back. Now it is consolidating near its upcoming resistance, which is seen around the levels of 135 to 136. So I think that is also looking good on the daily chart. Once it surpasses the levels of 135, then after we could see further positive upside momentum in this stock, which could push it higher toward the levels of 144 to 148 zone. So both these stock are looking good. I think for Ashok Leyland, breakout is expected of the levels of 135, while on the downside, the levels of 125 could provide a strong support.
All right, so that's the view coming in on the charts. But coming to you again from the charts, Lakshmikant, Snigdha is writing in from Delhi. She says she has 400 shares of AB Capital at a buying price of 225. She wants to know the target for this for the next 1 year, or should she sell it right now? What would be your targets? What are the levels to watch out for on AB Capital?
See, 3 to 4 days back, the stock has given falling trend line breakout on the upside, and now it is started consolidating near the levels of 290. So from here on, we could see a further upside move. Still, it has not made any reversal kind of pattern from where we could see some reversal in this stock. So I think this momentum will continue to go higher toward the levels of 360 to 370 zone. So overall trend is looking good on the daily as well as weekly chart. Even on the monthly chart, it has surpassed its May month high of 278, and even on the monthly chart, we have seen bullish crossover in the MACD, which is showing a strong upside move. So we are expecting 350 to 360 kind of range in the upcoming year, and this positive view will remain intact till it holds the levels of 250, where we have seen strong support for the AV Capital.
That's the technical view on AV Capital. But moving on, Sharmila, let me come to you now. This query has come from Ignatius, who's writing to us from Kolkata. He has a query on the entire consumption pack. He's a long-term investor looking to stay invested for a period of about 2 years. He says he has 50 stocks of Dabur in his portfolio at a price of 646 rupees. Godrej Consumer, 20 stocks at a price of 1480 rupees. 400 stocks of ITC at a price of 207 rupees. So he is wanting to know whether he should continue to hold all these three, that is Dabur, Godrej Consumer and ITC, or should he exit these and look at investing in some other consumption stocks. He's looking at a holding period of about 2 years. What would you suggest?
All three are great names for different reasons. I think Dabur, the kind of portfolio that it has and the kind of penetration that it has, that makes a lot of sense to continue to hold. Godrej Consumer, again, slightly, so while Dabur could be more on, honey, natural goods and, that kind of space, Godrej Consumer is more like hair care and things like that. And then they are also present in some countries outside India. So again, it is within the consumption space was slightly differentiated. And ITC, of course, as we know, is our premium cigarette maker, sin sector, so to speak. So that will continue to see headwinds in terms of the taxation, because I think being a sin sector, the taxes that it will attract will always be on the higher side. That said, there doesn't seem to be any dent in the sort of profitability. So from a longer term perspective, even that is good. I think, and just to add further, if he wants to invest further money, then maybe you could look at stocks like a Tata Consumer, which is again in the consumption space but slightly different. We spoke of IRCTC. So look for sort of related consumption themes and continue to grow your basket. But all the three stocks that you have are good stocks from a 2-year perspective.
All right, with that, we're completely timed out on this edition of Buy and Sell. Sharmila and Lakshmikant, thank you so much for joining us and answering all our stocks-related questions. But that is a wrap on this edition of Buy and Sell. Now, Kanishka and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Markets at noon is coming up next.
In association with SBI, be alert, be scam safe.
पैसा लगाना है तो सेंचुरी प्राइम क्लब प्राइम पे लगाओ।